can do is, when you see this bullish candle form, you can have a stop below this candle, and you can say, okay, you know what, break and retest, we're continuing to go up. So now remember, there's a probability of break and retest, right? So now this candle stops you out. So now what do? You just wait. This candle stops you out. You can do two things. Either you wait or you call it a day, right? Because the probability of break and retest not working just happened, because you got stopped out. So now you wait and it starts to go up, right? Starts to go up. What happened here? You got stopped out on your break and retest and price moved up. This happens to some people, right? This happens to me too. But when this happens, I don't try to enter a trade because I already tried and it got stopped out. So we wait. Now look what happens. Price came and closed back below this resistance, right? Price came and closed back below this resistance. So now ideal entry would be maybe a retest here and continue moving down. That would be the ideal entry, right? So we're going to wait and see if we can get an entry because we want to enter at this newly formed resistance now. Oh, see, look at this. Price came up to do the retest and then it continued moving down. So it should break support here. Yeah, it broke support. It broke support, came up for a retest again, and continued to move down. This would have been a very aggressive entry for a retest, by the way. Make sense? So we tried to take a buy on this candle because it closed bullish above support. We had a stop below the bullish candle, but the next bearish candle stopped us out. Right? But now when you look back in hindsight, you can say, okay, well, it did close above support, actually. It did close above support, and the next candle went up. But then this candle, bearish candle, came back inside the range. Right? It came back inside the range, and now you're saying, okay, it came back inside the range, so now this support becomes resistance here. So then you have a tap up. But I guess if we're looking at the 15-minute time frame, we'd be able to see candles coming up to this resistance. So would you enter here at the top of consolidation and wait for the candle to flip bearish, or would you go to the 15-minute time frame? Yeah, so I'd go to the 15-minute time frame and I'd wait to see if it comes up for me to take a sell from this fake out. Right? So this was 30-minute, and this is the 15-minute right here. Wait a minute. Okay. 1250, 12. Okay, yeah. So this is the 15-minute right over here. Right. So now, if we're looking at the 15-minute, this was the resistance formed, and then this is the candle that came back inside the range. You see? Came back inside the range. The next 15-minute candle came up to do a retest, and it started to consolidate. And then finally it broke down. This is messy on the 15-minute, but on the 30-minute, it is much, much more clear. And now what we're going to do is we're going to, so from a double top 2, so now we're going to look at it on the 1-hour time frame, and you're going to see how clean it's on the 1-hour time frame. This is a 1-hour time frame, right? It closed back in the range. We had bearish momentum. This candle broke down, and the next candle broke down and formed support. Once it formed support, you're looking left. See that, okay, we reached some sort of a support. So maybe have a stop below it and then continue to move up in the anticipation of doing a retest. Would it be safe to say that during times of a lot of momentum or after very large candles, you can move down to 15-minute candles to catch moves in your bias for retest? Yes. Yeah, you can, but that takes a lot of practice. right? Because when you're going to do that is you're going to start to enter on very aggressive entries because you're missing the move and you're trying to catch what's left of it on the smaller time frame. So that's going to come out to like very aggressive entries. So I would say that will take some sort of practice. So what's this here on the 15-minute? On the 15-minute chart, isn't that a big rejection? Which one? This one? Is that what you're talking about? The highest candle? Oh, this one? Yeah. Yeah. That one is a rejection. But then what you gotta notice is that as price is coming down, right, you have this support to deal with now. Yeah, that happens on fake outs, right? So now when price comes down, you're dealing with this support. So now basically, either you can wait for the support to break, which it did right here, and continue to move down, or you can take an aggressive entry anticipating it's going to continue to move down. I normally wait for it to break and then try to do a retest. Very tricky fake out. That's a good thing. That's a good thing. But hey, if you can manage your entries, if you can manage your emotions in aggressive entries, then like if it works, it works. The whole idea is about managing your emotions while you're in trades. All right. We have another fake out over here. We have candle breaking out. Candle broke out. Now what? This is a very simple one. See, we had a candle break out, but it couldn't sustain momentum. So the next bearish candle came back to close in the range. See this? It's closing back in the range. Right over here. Right over here. Starts to go further down. And now what's happening? Right? Now what's happening here? Retest. It broke below in these candles. It's going to go down. Yeah, exactly. So if it's going to go down, and now listen, even if this is a bullish candle, right? Even if this is a bullish candle, it closed below resistance. Even this is a bullish candle, it closed below resistance. You have to look at the closes, right? So now you can say, okay, as long I can have a stop above this candle, it closed below this support turn resistance, this should continue moving down. So you start to move down. So now how far will it start to move down? You start to look left, right? You start to look left, see that, okay, maybe this is support. Maybe I can have my take profit somewhere over here and then let the rest positions run, right? So, I mean, GPCAD doesn't. Yeah, so basically, if you're looking at the price, you're at 170, 600, 607. You got 507 here. That's 10 pips. You got 450 over here. It's like 15 pips, right? So even though if you missed this fake out because it just moved so fast, you can still catch this breakout moving down because you're waiting for the candles to close. Trust me, you have to wait for a candle to show you something perfect, because sometimes, what happens is that when you're seeing price move, what you tend to do is, oh man, you know what, price is moving, so what I'm going to do is I'm going to enter. Even though you should be waiting, you enter, you take a loss, and then 15 or 30 minutes later, you do see your setup. Has this happened to you? Like after some time, you do see your setup. And when you see that setup, you don't enter because you've already taken a loss, right? And because of that loss, your fucking confidence has been dropped down, you're not confident enough to take your trade, which you should be taking, because you took a loss on a dickhead trade. Right? And man, like, and most people don't get that encouragement at all. But this is something very important happens to a lot of people, that you have to wait. No matter how fast the chart is moving, so that it can entice you to take trades, but you have to wait. But would you enter in that sell even though it closed as bullish candle at resistance? Yes, because it closed below resistance. It did not close above resistance, it closed below resistance. So it's all a matter of taking chances. If it closed below resistance, there's a higher chance it's going to continue moving down. Is it okay to re-enter after you have a clear view of the market after a loss on the same trade? Yes. Yep, that's perfectly fine as long as you have your risk intact. Most people don't know how much they're risking. So that's very important, that you should know exactly how much you're trying to risk, right? Okay, so let's go to the next. I think there's a 30-minute chart after this. Also, you see there's strong big candle and momentum to the downside. Yeah, exactly. You know, there's like strong momentum down to the downside. Big candles. All right, so this was the 5 minute. This was the 5 minute. See now, does this break and retest make sense on the 5 minute? Just yes or no. As you're waiting for the 15-minute to close, because this is a 15-minute close right here. This last 5-minute candle, this is the 15-minute close. This just makes awesome sense. This just shows so much exhaustion. So much exhaustion. Yep. Perfect. Makes sense. This is a 30-minute chart. It's just straight down, 30 minutes. It closed below support. See here to the left, closed below support. And the next one created liquidity wick and then continued down. If my plan is only one trade per day and I already took the loss, still should I enter if I see my head up? Okay, so your plan is one trade a day. You shouldn't even be thinking about entering if your plan is one trade a day. Yeah, you guys stick to your plan. Because trust me, when I'm on Twitch or when I'm doing webinars, man, people are calling trades left, right, and center. Man, people send me DMs, hey bro, look at this, this is a nice trade, but I know my plan and I know myself. Even if I see the trade, I don't take it. I just sit tight. And there are a lot of times, you know, I'm sitting tight and I'm saying, oh, I missed this trade. Oh, which would have taken this trade. But in reality, I've already taken my trade. So it's part of discipline. If you don't follow your plan, if you don't follow your discipline, man, it's going to be very hard for you to come out of the 90% who fail and come to the 10% who don't fail. Sense? Yeah, no problem. It's because the regular steel. I'd rather fail in my analysis. Yeah, exactly. Okay. I'd rather fail in my analysis, yes, but you also got to fail smartly. You got to be smart in failing too. That's important. And it all comes down to risk. All right, let's go to the next one. Oh, okay. All right. So we have a candle here. What's this? This is a 30-minute chart. We have a candle breakout, but it closed with no wick to the top. What does this mean? Candle closed with no wick. Me personally, if I see a candle close with no wick, man, I don't fuck with that candle at all. I stay far away from that candle. I don't care if it goes up, it goes down. I'm just going to stay far away from that candle if it closes with no wick. That's a dangerous candle. Even though this is bullish, it seems that it's going to go up, but it has no wick. You stay away from that shit. Okay, so let's see what happens next. Oh, we close back in the range. See? So now this is the 30-minute time frame. So now you got to pay attention to these things here. we had resistance over here, and we had support right over here on the 30-minute time frame, right? Now you had this candle break up, and then you had this candle close back inside the range, right? So now maybe this move up was a fake out. So now as price comes up, you can take a sell, and I normally take sells with 10 pip stops. That's what I do. That's what I've seen, because when I started to notice fakeouts happening, I was like, okay, you know what? If I can have 10 pip stops, I can probably have profitable fake out trades. So that's me testing it over 4 or 5 months, right? Watching fake outs every day. 10 pip stops on GJ, yeah, it could work, but you have to watch them happen. You have to spend a couple of weeks watching fake outs as they happen live in the market, right? Because I've seen them happen over 4 or 5 months, right? So that's why I have that analogy, and I can kind of like guide you that, okay, this is what you can do, right? But it's better that you watch it happen over and over again so that you create your own bias, so that you can never turn around and say, okay, you know what, he said 10 pips, it didn't work, it's all on him. No, like, so you have to create your own bias as you move into the market, as you see it happen live in front of you, right? That's why we do Twitch streams, so that we can walk people through as price is moving, right? So let's see what happens next here. This candle closed, next candle did a retest, formed bearish. This should continue down to support. Yep, went down to support. So now here's the thing, it came down to support, right? You see this was resistance here before, now it came down to support. This is where you don't anticipate that the support is going to get broken. All right, makes sense? If it gets broken, awesome, but you don't anticipate that it's going to get broken at all. This move right back up. What does this mean now? What does this mean, this bearish candle? Exactly, right? Exactly. So it came up back to resistance, bearish candle at resistance. Maybe you can have a stop right over here, right? And then anticipate that, okay, we might head back down. It's trying to head back down. And now it's approaching support. There's no need to, like, you know, hold position or do whatever. There's no need. The first one, the first 30-minute, because 30-minute and above are good confirmations. 30-minute and above are good confirmations, man. Trust me. Because let's say you have a father, a mother, and you have an older brother, right? If your older brother tells you to do something and your mother tells you to do something, who's going to have more power, your mother or your older brother, right? Consider the 30-minute time frame as your mother, right? The 30-minute time frame has going to have more power over the 15-minute time frame. Exactly. And then you have, let's see, your dad, your 1 hour time frame, right? If the 1 hour time frame says we're going down, we're going down. If the 30 minutes says we're going down, but the 15 minutes says we're going up, we're probably going to head down. My dad is weekly time frame. Oh yeah, weekly is my great granddad. Great granddad is my weekly time frame. Yeah. Okay. So let's. So this was the 30-minute time frame. Let's look at the 1 hour time frame here. Yeah, this is the 1 hour time frame here. See here, what we're going to do is we're only going to look at, we're only going to see how candles are trying to tell stories, right? Because man, I spend hours looking at charts, and I spend like a lot of time looking at charts just to see what kind of stories candles are trying to tell, right? So now this candle tried to go up, but it closed below support. So the next candle went down, you know, then this candle formed support, and then we tried to go up, broke out, did a retest to go up, but then candles came back down. So now this is interesting, right? The bearish candle came back down, and then this bearish candle went right back up to resistance, but then it got rejected after this candle formed. and then the candles went down, and then it formed support, right? So I'm constantly looking at this. So now this bullish candle formed at support. So maybe if I was looking at the charts, I could probably have a stop loss below this bullish candle in the anticipation that, okay, bro, like we formed support, we should be heading back up now. Because now when you look left, let me remove these candles, these arrows. When you look left, you see that there's a clean move that can happen up, which it did happen. And then we had this candle break out of this resistance again. We had the candle break out of this resistance again, and now we're waiting for the next candle to form a bullish candle, but it closes back in the range. So look, it closed back in the range. So what's going to happen? It's probably going to start to move down because it closed back in the range, right? So now check this out. Check this out. Check this bullish candle out with no wick to the bottom, right? There's no range, right? Now look at this breakout candle here with no wick. There's no range, because if a candle has a wick, that means that it has created range for the next candle to follow. Makes sense? I hope guys are taking notes, man. I really hope you guys are taking notes. I really hope, because some people, you know, they don't take notes. They just want to watch, thinking that they will retain all that information, but in reality, they don't retain nothing. So I hope you're taking notes. Now, when you're looking at these candles and you're trying to make sense of it, there's no use to make sense of it. Why? Because look at this. Look at the time. 1 p.m., 2 p.m., 3 p.m. This is consolidation. New York is closing, right? Notice how you have big candles when sessions are open. This is almost like London close. This is 10 a.m. Look at the size of this candle here. You know, and then you have 9 a.m. here, New York open. Look at the size of these candles, big candles, right? This is your trading time. And when trading time ends, you have consolidation. Right? All right. This was the 1 hour. This is the 1 hour on the same chart. All right. Okay, what is this? So, whenever you come to the chart, you try to tell a story, right? Whenever you come to the chart, you're like, okay, well, you know, like, I guess we had support over here, and this candle broke support. Yeah, probably wait for pullback, and then you have support over here, and then you had maybe resistance over here. Okay, perfect. So now we're going to wait for a pullback, maybe to sell it, right? To sell it. This is a 15-minute chart. Let's see what happens next. Oh, we have a candle here that formed with no wick to the top. What does this mean? This means we stay. I definitely stay away from it, because two things have happened here, right? Two things have happened here. That this candle formed with no wick, and this candle closed back inside the range. Like, you know, if this was to go down, I would want to see a wick over here and have this candle close somewhere over here below this support turn resistance for it to go down. But it closed back in the range with no wick, so I'm just staying away from it. Make sense? So we wait. We're waiting. Oh, nice. So we're starting to go up now, right? So now, what did we learn about fake outs? Right? That there is a 70% chance that if there's a fake out, it's going to continue moving up through the resistance. Right? So maybe if you're trying to enter, you're keeping a stop below support here, or below the previous, like below this 15-minute candle, in the anticipation that, okay, now since we have had a fake out and candle has closed back in the range, so as long as price stays above this candle, we should continue going up. right? But the candle have tiny wick. Yeah, that's true. The candle has tiny wick, but we're going off what the price is telling us, right? Because if we were only looking at the candle, we would say, okay, you know what? It has a small tiny wick, so the next candle can potentially come down. But this is the 15-minute time frame, right? We're looking at the overall objective of what's happening because the fake out is structured like this, okay? Price came up over here, broke down, came back up in the range, it's coming up, so there's a high chance it's going to break above the range, right? So we're looking at the overall move instead of what the candle is doing. Let's see what happens here. Oh, see it pushed up. Pushed up to this area here. Because once it starts to push up, you're looking left and you're watching this. So, I mean, if you entered somewhere over here, which is 98800, but you also had a stop, right? The number one thing is you had your bias. The bias was, okay, this is probably a fake out, and 70% of the time it might break out of it, right? And then number two is where is your stop? So if you're entering at 800, look at this price, 800, your stop is at around, let's say 700, that's a 10 pip stop. You have a 10 pip stop. So now whether price can come down, you can enter, or price can, you know, start to go up, you can enter, but that's all on how you want to do it. Because like generally, I would wait for price to come down to make a wick so I can enter. I would definitely, generally, I would do that. So when you determine stops at 10 pips, you just shoot for 10 pips? No, I generally shoot for like 12 to 15 pips, and then, you know, I take profits and then put like stop loss at break even and let the last one run. But in this case, I wouldn't be taking any entries because price didn't really retrace down for an entry. And that happens sometimes. And you should be okay with that when that happens. So 70% that it will break out of the opposite side of the takeout. Yes, exactly. Okay, because I always hear people say, saying to get 2-to-1 ratio or 3-to-1, but I feel like that isn't always possible. That's actually a very good statement, David Colombo from Colombo. That's a very good statement because normally, oh, New Jersey. Yeah, New Jersey. Yeah, because like normally that's actually not gonna happen because, you know, some people say, oh, you know, I caught like 1 to 3 and 1 to 4, but like how often are you catching 1 to 4 or 1 to 3 or 1 to 2? How often is that happening? Not often enough. I can tell you that right now. It doesn't happen often enough, you know? So what the best thing I do is I just aim for like 10, 12 pips or like 15 maybe, and then I put stops at break even, and then I let price do what it wants to do. What about a buy stop above resistance? Do you use pendings? I don't use pendings. I don't use pendings. I will use pendings if price has been consolidating for a long time on the 1 hour or the 4 hour, then I would use pendings. Because the longer the consolidation, the harder the breakout. At the end of the day, it's just getting pips where you kind of know where the traffic is and take profits if you like. Yes, exactly. At the end of the day, it's like you want to get confident in taking winning trades. At the end of the day, that's it. When you're starting, you want to get confident in getting 1 or 2 winning trades, because if you can get 1 or 2 winning trades, man, you feel good about yourself, right? If you can end the day with one win and 1 loss, you know that, okay, maybe you're at break even, but you did good. You didn't end the day in a loss, right? Or if you end your day with 1 loss or 2 losses, you still should feel good because you didn't end the day with a significant loss, right? And the only reason you're going to have a significant loss is if you're going to start chasing your losses, right? Let's say you have 2 losses and you feel like, oh, fuck, I got to make this back, and you chase the loss, you're going to get another loss, 100%. 80% of the time, you're going to get another loss because now you're trading out of emotion. You're trading out of like, oh, no, you know what? Fuck you, market. I'm going to come take my pips back. But no, the market is going to take the pips away from you all the time. It's like going to the bank, right? You go to the bank and you realize that, okay, you know what? I have 5 minutes in the bank or like 10 minutes to grab whatever I can. So you grab whatever you can and you head up, right? But if you stay long enough, you're going to get caught. And you know that if you go back again to the bank, you're going to get caught. So same thing here with the market. Yeah, exactly. Yeah, Jalil, that's absolutely right. Okay, so let's go to the next one. So there's a lot of psychology here involved, right? Like you mentioned me saying, take what you can, like, put stops that break even, take profits, always take profits. When price comes to support or resistance, just know that price can bounce. That all comes with psychology, because when price is rushing towards support, it's very normal to think, oh, we're going to break support, fam. This is going to break support. But it's approaching the support, right? It does not mean it's going to break support if it hasn't broken support. When it breaks support, then you can say, okay, it broke support. But it won't happen if it hasn't happened. So let's go towards, what's this? 5-minute chart? Yeah, see, this is a 5-minute chart. On the same, this is a 5-minute chart on the 15-minute example. So now when you look at the 5-minute, you can see some more information. You see this 5-minute candle. This is unnecessary information, but it's really good to be aware, like, in your conscious mind that, okay, what's happening on the 5-minute chart, so you can catch a move. So you see the 5-minute candle close back in the range, and then you can say that, okay, maybe I can take an entry with the anticipation that the higher time frame is going to continue moving up. Right? So sometimes I look at 5-minute just to study market structure. I will never look at the 5-minute to take an entry. I think it's very, very weak confirmations, and I've been burnt a lot doing that. Okay, let's see what's next. We have the 1 hour. Yeah, see, so this is the 1 hour chart. So when on the 15-minute you see a candle going down, a candle going up, on the 1 hour you just see a candle just making a wick, like quick wick down and boom up. And now on the 1 hour, when you look at how the market moved, you see that there was resistance here to the left, candle closed above. The next candle did a retest and it continued moving up. And now when you look at